All right, this is a serious one. The stock market crashes up to super critical resistance level. We're like smashing the bottom of this bull channel, and GameStop crashes down to critical levels, and bounces right back up. Okay, so I'm surprised GME came all the way down here, but it did throw a dart here, so that's not too surprising. But we've hit this support on GME, what, 4 times? Okay, this is Brian Lewis, MMT Investing. Let me show you trade setups first, then I'm going to do the charts, then I can do some technical macro stuff. So, trade setups, GME, that was it. That's super support there. I think we're gonna trend in here before we can pop out for the next day or two. So I wouldn't be surprised to like bump the head at 220 here or something and come back down. This 194 line, I thought we were getting away from it sooner than this, but this is where we popped up to here. This is a critical level on the previous bubble. We've got a neckline there. So this is like a bottom neckline and a top neckline from the previous bubble. And so we smashed the bottom neckline, made it to the top, came back and came through the bottom neckline again to this magical level here, whatever, 174. And it was super sharp bounce. Okay, that's GME. So the trade was long at support, but I think we'll be picking up support again around here for like another long entry on GME. We should get several spots for a long entry on GME in the next day or two around the 194. We might poke through it again, but I doubt we're going to go too far through it. Then the upside, like this 470-ish, 500 range is where the top of the previous one was, and it's pretty fuzzy, and it was overnight trading. It looks like it peaked actually higher, like 510 or something overnight. So that's kind of like the takeoff spot where you break out above the previous one, but we're trending. We haven't taken off yet. We're just kind of trending up through the neckline right now over the next week or two or something like that, it looks like to me. But once we break above this neckline, especially out of the top, it could be like crazy. All right, that's the idea on the GameStop trade. The meme stocks, the other meme stocks are semi-following the GameStop trade, but they're doing like more normal-looking trend lines. Like if I do AMC, yeah, you can see like AMC is just on like a normal bubble trend line, and it pushes into the trend line and it popped here, and it should probably pull back and push into the trend line again down here around 12. So that's kind of like the next entry I'm looking for on AMC. The meme stocks are doing similar stuff like that. I don't know, like COS is kind of a crazy one. Let's see. Yeah, COS has a level down here below. I don't know if that trend line's good. Probably not. That chart's too messy. AMC is a more typical looking kind of trend line chart where you just push into support and pop. Anyways, meme stocks do look like they're still blowing up, and the stock market looks like it's blowing up at the same time. But this bull channel, let me zoom out to like hourly. Okay, so the idea here, well, we've been on this little bull channel here for a while, for several months, and then we started breaking down, and I'll show you the technicals on this, but the trade setup here basically is we're hitting the bottom of the bull channel again. We've been rejected, like we did a false break into the bull channel here, we got rejected, rejected. And it's like, and now we're grinding underneath. See how over here, how we were grinding underneath the top of the bull channel, and we did a false break in, and then we fell out. That looks like what's happening right now. We're grinding underneath the bull channel, false break in, and this is the rising wedge. Yeah, I'll title this video like Dead Cat Bounce, Rising Wedge, whatever. But this This is a rising wedge pattern, and it's a rising wedge that has busted to all-time highs, which looks super bullish. This is going to be a massive, nasty bull trap if this thing comes down, because there's nothing underneath. Yeah, so basically, the rising wedge, people always draw like a triangle outside of the shape of the thing. But what you get on a rising wedge is you kind of pop under a resistance level here that we got, and then we pick up a bull line, right? So we're above. Let me do the trade entry. Basically, this is the trade. Like the S&P shows you the shape of what's happening, but the Qs are leading the down move right now. It looks like we're rotating out of tech, and we'll be rotating into like materials, minerals, miners, commodities, like all of those sort of things are going to be rolling in. They've already been bulling since the COVID crash. But it looks like we're going to be rotating out of tech, and that's going to be a trailing sector, because tech was leading forever, like the whole bull market for like 12 years, and especially the beginning of this bubble. But you can see, if you look at the Qs, you can see that the Qs are kind of drooping down, and they're weaker than the S&P, and this that's a key level that the Qs are getting to right now. But on top of the Qs, Ark Invest is the same chart, and it's even droopier. Like Ark Invest is like the Qs, except that it's like a popularity fund, and so it gets like a higher upside on the way up as people pile in, and it gets a more exaggerated downside when you rotate out of it as people pile out of the fund. So it's just like that's the short trade for me, and I just shorted the crap out of Ark again. I've been trying to figure out the spot, and I didn't think we were going to do this insane run up to the back of the bull channel on the S&P, but we did. That's pretty cool. So basically, yeah, I'm just long GME and short Ark is basically it. It's very diversified strategy, because that's the only two things really happening now, other than playing around with some meme stocks. But when we pull down, I'm going to be looking. This is the area I'm looking at here. I'm going to be looking at long miners and minerals and all that stuff. I think FCX is good, and I think IWMs, the non-tech stocks, are still bulling pretty hard. I think the IWMs will probably bull to the top, and I think we are on the front of the bubble still. And I think this is going to be pretty much our last pull down before we go to the top of the bubble. And I think we're going to be kind of topping and rolling up in here, because we have a super long-term bull channel that I'll show you. This is really long-term. Anyway, that's my short idea, is short the bottom of this small bull channel. And we've already painted the lines down. It looks like we're painting a third line down to me right now. So let me zoom in on this. Let me show you a couple of things on the technicals here. So we're bulling out. See when we hit top resistance in the bull channel, we've done a couple of breakdowns here. So like this breakdown, we just put darts through and we coiled on top. So this is not scary, but this one we coiled underneath. That's scary. That means we want to come down out of the bull channel. And so you see when we get over here, we start throwing darts and we start following them down. Support on the bull channel. It's fine. We hit the resistance again, we start throwing darts, we start following them down. I call these stabs. And see we coiled above purple here. And coiled above, that's all good. Purple is super solid. We never coiled below it. But we did coil below yellow, we did pull down, and now we coil above inside the bull channel, right, and go back to the top, and then we start throwing darts again and start crashing, coiling under the bull channel here. That's super dangerous. False breakout, really dangerous. Then we start coiling below the red line, very dangerous. Back test off the channel, super bearish. Then we get into this rising wedge pattern here, and we coil hard under the red line. So this red line to me is dead. This is no longer support. This red line's dead. And then we start bulling on top of this, right? So you have like this resistance on the top of the rising wedge, and you have a support here, right? So we started out on support, got knocked down underneath, coiled underneath both, super bearish spot right here to coil underneath both of these lines. Then we back test the bull right at the back of the channel as like textbook perfect rejection. I shorted the crap out of this, and then I saw bouncing on this line, and I had to get out because we did a false breakdown here, and then we triple tapped on top. Let me get back into a 5-minute. Yeah, so back here, this one, I was in here on like the 1 minute, like trying to figure out exactly where it's going to hit or reverse off this thing if it's going to get in the channel. But like I was shorting Ark here, and then we got this false breakdown. So this coil below here, that kills this line. So this support line's dead. Both of these lines are dead. That red line is dead. The red line back here is dead now. These coils under kill it, kill it, kill it. That's no longer support. Now we can break right through. We can slice right through without even worrying about it. Okay, so then we're headed up to the back of the bull channel underneath the rising wedge resistance. And so I called this like a dead cat bounce, but this is not a dead cat bounce because a dead cat bounce is on the back side of a bubble. When you're in a bear market, it's a bear market bounce. This is the front side of the everything bubble. So this is a rising wedge on the front side of a bubble, but rising wedges are notorious for crashing down to the beginning of the wedge and sometimes farther. So yeah, so then we started stabbing again here, and I'm drawing a potential stabbing line here. If we get bounces off of this, I'll see if this is a good line or not, but I think we've already busted all of these lines, and we're back testing the crap out of this yellow line. So this is sort of the bear bull spot, is can we get into this channel? Like if we start getting into this channel and we start flagging above it, it'll start looking bullish. If we fall back underneath, it'll be really bearish looking. And then you can see the coils are underneath. Coiling, coiling, coiling underneath, hot coil underneath here. That's all super bearish, and then the moves above are stabby and kind of sporadic. And so the stabs are generally like, if you coil under and stab up, that's going to go the direction of the coil usually. But that's kind of how I look at the lines and the trend lines, is like the direction of the coil tells you where you're going to go, but then you usually got to go back and test the opposite case. Like this is a bearish coil, but you got to go test the bull side first, and then you can make the bear move. Same kind of thing here. Like this is a bearish coil, but you go test the bull side. And then when you coil under resistance, that's just a rejection. But when you slice through something and coil, that's going to lead a later move down. And so we coiled above here, and then we did break out above it here. So you can see a lot of indecision kind of on the rising wedge. And now we're kind of out of the rising wedge and we're back testing it. And we could hit this, we could back test this thing a few times and drag this thing out a little bit. I mean, we could hit it up here, and then we could still fall out bearish. But the idea here, basically on the S&P, let me go out to like hourlies again. I'll show you a little bit longer chart, is that we do have intent. Actually, look at this coil here. This is a really cool one. Like when we were grinding on the top of this blue bull channel, we did a false coil, tiny. It's tiny, but it's a coil above the blue channel. And that's the first time we've ever coiled above any of the bull channels, is that one. And that would indicate that we want to get above this bull channel somewhere up here, like 43 in here. Like this, after this down move, this is an upside target, is above this bull channel, but below the big one. And I'll go out farther to like the daily, because this is where you can see the real picture. I mean, we had our super bull channel since the 2008 crash. We got into this bull channel, and then this is coils above and stabs. That's safe. Here we coiled below. That's dangerous. and then you can see we started stabbing down and we stabbed below, and then we got back up, right? Stab is not bad, but now we got coiled below. This is not good. That's going to lead a down move, and then boom, down. And now we've painted this downward kind of this downward bear market lines. These are bear market lines. We're not in the bear market yet, I don't think. Some people think that this right here is the top. That doesn't look like a topping spot to me. It looks like we're just going to pull back and check out this support area right here on the channel again. Maybe stab through it, but I think any stab through would be a vertical V-shape reversal out of here. I don't think we're going to stab down here. And you can see here, these didn't really coil underneath. There were two separate stabs, and you can see the coiling is on top, and it's just a stab and a check of this support. This is the next support from the previous one. So this looks like the yellow line is still going to hold. So I still like the yellow line. I'm not expecting a rip under this thing at all. The red line is dead. The purple line and the yellow line are solid good, and this neckline is still reasonable. The necklines don't really hold the trades, but you get a lot of action on them. But I mean, look where all the lines freaking intersect, like all of them. All the lines intersect right here. Like this spot is ridiculously hot. We gotta go. We gotta go there. That's where we're gonna go. I have this potential kind of down trend line here where we started stabbing down, just in the 5-minute chart I showed. But yeah, that's what I'm seeing, is that this purple kind of whatever magenta color line is probably the bear market line. Let me go out. Let me go out farther. So like this is the topping pattern line. Like we might bull out up here or something, and then, you know, like bam, bam, like this is a target, and that never had a coil underneath it. That looks like a decent support, like for a topping crash kind of pattern, and then maybe stab. But like this line would probably be like a bear market action line. Like this purple line could last for like 10 years or something, in the case that we are looking bearish. And so I want to talk about sort of technical indicators. This is a bear topping scenario where we're not to the top yet. We're still on the front side of the everything bubble, and on the front side of a bubble, this volatility zone is really hot. It's like the top up here is like a rubber band, and like when you pull down, you like slingshot up, like, and I think it's going to be hard to break through here, but I think we're going here, and that might freak people out a little bit. But that's what it looks like to me. And yeah, that's kind of the look. I guess I could go out to like the S&P doesn't go back too far. Yeah, this chart, this is just like the financial crisis, housing bubble stuff. But we have, like, if I go to, let's see, like the Dow, yeah, pretty wild. Yeah, this is crazy volatility. Oh, and just kind of the same thing. Like we had the .com and the housing bubble do like this chop pattern, and then we got this smooth bull channel, and we started ripping down out of it. Let me go back into like an hourly. So that's our big bull channel that's up here. That's from 2008, and the bull channel support is down here. That's the bull channel support I was just talking about here. It's at 35, whatever. That's what I think we're going to do. I think we're going to come down here. But you can see also on this chart a super similar pattern. That's like in the short term, like this past year, we did like this chop, which was kind of like the sort of like the .com and the housing crisis shape chops into this bull channel. And so we have like a little bull channel inside of a bigger bull channel. And now we're chopping down on both of those channels, which is pretty interesting. And then I wanted to do the Dow Jones on like a monthly. Right. So this is the Great Depression back here, and this chart starts in 1897. So this is more than a 100-year chart. But we've had this yellow kind of bull market line, and then we've kind of had this topping line where we have gotten rejected. We got rejected there. We broke out and got rejected here, but now we're like coiling, grinding on top of this thing, I think, or maybe we're under it. It's really important which side of the line you get the coils on. We're probably under it and sticking our nose out right now. But this is the Dow Jones, not the S&P. But this is pretty wild to see. I don't know, 100-something year kind of bull chart on the S&P. But we do, when we get up away from this yellow line, we tend to pull back to it or through it. So I think it's just sort of a dangerous spot, and back to the line would be like chopping the stock market in half, and through it would be a crazy pullback. But yeah, I think this is just a sort of a dangerous spot for the stock market here in general. And then you can see the same chopping pattern kind of down that we have on the on the S&P, but I guess there's sort of like these stabs, if you draw the line underneath the stabs as really fast and low, I guess that could happen. Like if that happened, we probably are at the top and that would pull down. But I think better lines are like here, like it stabs through, but then there's a spot where it like jumps on top. And I think this red line holds in that case, and I think that's a better way to draw the chart. And that goes out to 2024. So that's a long way out. And how high we could go above this before we pull back, I don't know. But anyway, that's just a look at bull channels and our bull market lines. Sometimes you get into a tight channel. Usually you just kind of wobble around a kind of a bullish line. But yeah, that's the market. And then I want to look, I guess, at the dollar. What am I on? Monthlies? That's too big. Let's go to days. Right. So the dollar, this big down move in the dollar correlated with a huge up move in the stock market. And that tends to be the case. So if we go back to the financial crisis crash, we have been on a bullish trajectory. The dollar's been bulling for a long time, since 2008 or whenever. Yeah, back here. Yeah, like 2008. And then sometimes we'll like pull through, but then we kind of bull at an even steeper line. And the stock market's been going up as the dollar like slowly bulls on this line, but vertical up moves away from the bull line tend to crash the market, and these down moves tend to push it up. So like right now, it looks like we're picking up a steeper bull market line. It looks like we bottomed. And the DXY is wobbling, and it's really hard to tell what's going on. It's hard to call the dollar bullish here. And this line doesn't necessarily like crash the market. Like you can have a bullish market that trends up a strong dollar line. And we've been doing that since 2008. We've been bulling and had a strong dollar line. But it's just when you go like this, like that will crash the market. You'll get a pullback if the dollar rockets. And you can see on the yen chart, this chart is much better at showing, and the yen bottomed the exact same time the DXY bottomed, but you can see the yen has just ripped across its channel and just like broken out like crazy. Let me go out to like weeklies. I like to use the yen kind of to forecast the dollar because it moves not in the same pattern, but like a bullish yen breakout is going to be a strong dollar breakout against like the euro and the DXY and stuff as well. But you can just kind of see the dollar, the currency pairs like they'll channel for a little while and then they'll break out and they'll channel again. But see, we had a big breakdown here, and you don't know which way you're gonna break out. But we're getting near the end of this channel, so I think this might be the correct direction. But you know, we had like this bullish breakout here, and it completely went the other way like immediately afterwards. So this is not guaranteed. It could easily just reverse and crash down here, but this is definitely a short-term strong dollar move in the yen that has completely correlated with the DXY making a strong move. And we're still strong. Like we did this W bottom support at a steeper dollar upline, and now looks like we're finding support above here. So that looks like a bullish dollar to me, which is not good for the market because this down move was when the market was ripping up, and now our reversal is not good, but you can still bull, but not just like vertical. Like this vertical move was correlated with this super down move here. But you can see since the financial crisis, the dollar has been bulling, and it's been increasingly bulling. Like it's parabolically like working its way up. So that's what I see. I mean, that's like Brent Johnson's kind of dollar milkshake theory, is that the dollar is the reserve asset. Raw Paul says this too. It's just that the dollar is the reserve asset for the world financial system. And so it's very easy for all the other currencies to print way more than the dollar is printed. And the dollar, like if other currencies want to go weak, they will. The dollar cannot go stronger than them, just mathematically. In order for the dollar to go weak, it has, I mean, other than pullbacks, like we've had plenty of pullbacks, but this has been bulling since 2008. In order for the dollar to actually go weak, you have to change the reserve currency structure of it, I think. I just don't think this can pull back. Jeff Snyder says similar stuff. I know Lynn Alden thinks that we're going to pull back into the 80s or something, and get a really weak dollar for a while. But yeah, whatever. The theories are whatever. They're all theories, but the trend line is this right now. So until we break down under the trend line, like I'm on the strong dollar train. And what's up with the VIX? Let's look at some volatility and stuff like that. So this big push up has brought the VIX down, and we're pushing the bottom of this support channel on the VIX, and not quite low enough to close like this gap, if that is something that matters. But the VIX likes to find support and pop off of this bottom line for a while now, and then it has a really hard time getting up much higher than that. But the VIX is low, which means it could pop sometime soon. And the VVIX, which is the change of volatility in the VIX itself, is popping and kind of increasing, which could lead a higher move in the VIX. That could be a reversal signal, not too strong. What, oil? Yeah, goodness. Oil looks ridiculous on a log chart because it did that stab. It did that stab down negative numbers. So if I like auto adjust the chart, it looks ridiculous. Okay, take off the auto. But oil's been in a down channel since 2008. We kind of topped on oil, and we've been in a down channel. And every time we poked out of the top of the down channel, we've crashed either into the channel or all the way across the channel. Now we're up out of the top. We're really high up out of the top, which is interesting. And I haven't checked the oil chart, actually, in a minute. Let's see what we're doing. Oh, we are falling underneath the bull support line here. So the line that we've been going up, breaking out of the channel. I mean, we've pulled under it a couple of times, but we've pulled under it on a sort of a flagging support level. Right now, I don't know. I I don't really see a flagging level. Maybe here. Yeah, maybe we're flagging like around this area or something. But if this continues down, like back down to here, that's busted. If oil falls back to like 60, oil's in trouble. And you could see oil working its way down all the way back to the channel and inside of it or something like that. So oil's a really complicated one because energy should be bulling if we're getting towards the top of the bubble, like in traditional kind of theory, but right now, like oil is part of the reserve, like the petrodollar. The dollar is like the reserve asset, but oil largely backs the dollar, the petrodollar system. So oil is just really weird. I don't have any kind of theory on that. I'm just looking at the lines, and this is not in trouble yet. I think we're just kind of pushing through the support line, and if we pop up above it, then we're bulling. But yeah, it's getting into sort of questionable territory here. I'm not a big oil bull like I am on like some other commodities and stuff, right? So let's do yeah, anyway, so like I was saying, Ark is sort of leading this down move because I think that the market is rotating out of the big tech and even out of smaller tech and growth stocks. Like all of the tech, innovation, and growth stocks are rotating out right now. That's what I think is happening. And that's what this pullback is. And then they're not going to like crash out. They're just going to go from a leading sector to a trailing sector. They're rotating out. But what's rotating in is minerals, materials, metals, commodities, right? And miners probably. And so FCX has been the huge growth leader in this sector. Freeport, their mining and minerals company, that's been bulling out really hard since the COVID crash. It's even a crazier chart than like IWM. And so this is sort of like the momentum leader covering all the sectors I just mentioned. So this is my favorite, probably bullish stock after this pullback that I think we're going to get. This is my favorite one. And then IWMs are pretty bullish too. It's a little bit droopier of a chart than the mining and mineral chart. Like the market pullbacks pull this back a little bit more than they do the mining stocks. Because this is getting late stage too. As you get to the top of the bubble, but this has been bulling really hard too. So I think IWMs, like these big pullbacks have barely pulled IWM back. In fact, it's bouncing uphill as the stock market's pulling downhill and the tech is pulling way downhill. Like IWM is bouncing uphill. So this looks like it's still really strong, probably to the top of the everything bubble. IWMs are good. And then like the mining and metals and stuff, those are going to be good past the top of the bubble. And then so this is kind of a fun area where, like small miners like Load looks like it's kind of flagging. And this is a cool stock. Or like AG, like the silver miners. Like we're getting inflation and we're kind of bubbling. So this looks like a big breakout of a channel. Let me go back on AG a little bit. This is a stock I think is pretty cool right now. We've been in a huge consolidation pattern for a while on silver, on the silver miners. And AG is like the kind of the leading silver miner stock. And so we broke, like we coiled out of the channel and then we broke out of the channel. And now it looks like we're flagging and we might have picked up some kind of a bull market line. It's not trading well enough for me to see exactly where it is. But somewhere kind of around here, I think we're going to pick up a bullish, kind of a bullish bubbly breakout kind of line on silver. But I don't know if silver is going to be good past the top of the bubble because silver likes inflation. It's also a commodity. So I think as long as we have inflation and commodity bullish activity, like silver probably be good or maybe even overperform. And the silver miners would be riding that too. So like I don't these pullbacks in the market don't seem to be affecting this chart at all. It seems to be in its own space, just kind of setting up a breakout right now, which looks good. And I think I'll like this to the top of the bubble, and then I'll get cautious with it because silver generally does not resist bear markets in the stock market, but it might this time. It might be different. It might be different conditions. If we are sort of inflationary and commodity bulling, silver should bull like harder than any of those if you have those two combined. But if we go into like a deflationary down move, which is what it looks like to me, it looks like a deflationary down move. I'm not gonna probably be as high on silver. Yeah, and then what we have all these crazy like meme stocks are just like flagging up bull lines, you know, like this one looks like it might be in a good area, or it might come back down and test this spot again. Yeah, if naked comes back down here, I'll definitely buy it. But yeah, like naked and GME and COS and you know, AMC, BlackBerry, those kind of stocks are like all doing ridiculous like bulling just bubbly, crazy nonsense, which is kind of fun. But I think after this pullback, when we rotate out of tech and rotate into them, like the minerals, these miner stocks are going to be the next kind of bubble stocks. I don't know how long the meme stocks are going to go, because these are sort of, well, they're not tech related. Like GameStop and AMC is weird. I don't know. These are weird. They're pretty fun. Yeah, okay, so that's kind of a look at the whole market, the everything bubble. Let me go back out and just kind of paint. Let me just paint what I'm seeing right now out on a big chart, because I think we're back testing this. I think we're back testing this little bull channel here right now, and I think we're going to come down here, and I think we might be using this line and bouncing down, and then when we get here, that's a lot of support. We have no breakdowns of this purple line. I mean, I guess if we came down faster than that, we've already busted this red line. Like maybe we can come down in here prior to the yellow line and make some kind of move on the purple line to predict what's going on with it. And then maybe come back over and test this stuff again. Like, it seems like there's a level here. Let me get rid of this line. This is an idea, but we don't have any hits on it to like say that's actually there. Yeah. All right, let me try to draw the biggest drama scenario I can. Just like overdo it a little bit, because the market will do that stuff. So if we freaking teleport down prior to this intersection, like coil underneath the purple, you know, and come back, and then we stab through the yellow line, you know, like say that we want to break it, let's coil under it, because we want to break it eventually, but we're not going to break it right now, right? And then we can stab like maybe down to here, maybe farther, I don't know, like if we really did like a stab, like I don't think we can do one of these stabs again from here. This purple line's way too strong, but we can stab through it. Well, we'll have to see if we get any kind of action on it that makes it look weaker than it does right now. Right now, that purple line looks really strong, but just overdoing it, and it would not be this long of a time scale, because I think that we want to get up in here above this blue channel, because we said we did. There was a little breakout above this blue channel, and I think that it wants to get up in here, and then probably cross, and then top, and something. Like that's where I'm seeing the top of the bubble. We've had no indication at any point in the last 12 years, not a single, even small indication that we want to break out of the top of this, the big blue line on this bull channel. Like there's nothing. That says we're going to break out of the top. We've never coiled over the top. We've just smoothly or sharply rejected off of it every time. So I would not be surprised to see us up here testing this thing, 43 something. But I do think we want to get in here, and we probably reject, cross the little bull channel, and then something like that. I don't know. That's kind of the topping area that I'm looking at. But right now, I'm trying to figure out what happens here. Like, do we just like double bottom hot? I would probably will stab. I bet we stab somewhere into this area, maybe down to here. That's the neckline. I think that line is a line that it really likes. It might try to stab like all the way down there, and then it could literally just freaking go like vertical right to here. There's your drama scenario, and this is not investment advice, always entertainment scenario. Let's get back in here, see what this thing's doing. And yeah, okay, so now we're breaking down back under, or back underneath the channel. We're back underneath the bull channel. We've rejected off the back of this wedge now. Okay, so let me just talk about the wedge, because the wedge is the deal for right now. Okay, yeah, so we're just grinding under here. It looks bearish to me. And this is mega resistance. This is our, how many times have we rejected off the bottom of this channel? We coiled under it, false, hard rejection. Now we're grinding it. We did a false move into the channel on this rising wedge, and now we're under it again on a tiny time scale, but it looks bad. It looks really bad. And I'm mega bearish for the next like 5 days or something, like this week. I'm bearish until Monday, but I think we're on the front side of the bubble, and I think that any pullback here is like a freaking rubber band string that's gonna slingshot up, like up here. So that's kind of what I'm looking at. I think we're still on the front side of the bubble. I think we want to go up here, but this, we have got to get down here around this. This intersection is ridiculously hot. Like every freaking line on this chart is intersecting there. Like we're going to go there. We're going to go down here. I just don't know what it's going to look like. This purple line's good. Like maybe we break this red line, like stab the yellow line, do like a little bat wing pop. Like purple line's all good, but are we out of here? Probably not. Let's go back and like try again. I don't know. It's something ridiculous. And then there's like nothing stopping us from getting like all the way back up into this. There's nothing in the way. Just like there's nothing in the way of us falling down here. Like we can teleport down here and we can teleport up here. Because it's just the little bull channel and the big bull channel is all that's really going on. So like when we're in between these two channels, it's just a freaking voided space. So this could get freaking crazy. The next month could be insane. Anyway, that's the idea. I don't think I have much more. I covered way too much stuff, but it's just such a critical spot on the on everything, on the meme charts and on the stock chart, and then just kind of the sector rotation idea, I guess. Oh, let me look at bonds. I want to talk about sector rotation a little bit more, because like before you start bulling, before you get into the bull market, like bonds are good before the bull market, and they're good into the bull market, and then they kind of swing opposite to the bull market. So there's like the bonds versus stocks kind of thing, where stocks are good or bonds are good or whatever. But that's during a bull market. Like the bonds start bulling before the bull market. I'm gonna get out to like a weekly on these things. But you can see bonds were bulling. This is like 2003, and then 2008 crash, like bonds go up with the crash, like inverse, right? But they've been bulling. I mean, that everything bubble started in 82, And so bonds have been bulling for a long time, since like the 70s. But they might not be bulling. That might be the end, right? That COVID crash might have been the end of bonds for real, because, and this is the down channel I painted all the way back down here on bonds. I think they're screwed because what happens when you're bulling up a bubble? Like the bonds are good early, like before the bubble they start bulling, and then they stay good through most of the bubble. But then all the big tech and growth stocks start bulling through the main part of the bubble, which is what we've seen. And then when you start getting near the top of the bubble, it's then that like the commodities and minerals and miners and all that stuff starts bulling. Like really close to the end of the bubble, and then energy and stuff. You get into like depressionary stuff after that, but when you start getting to the top of the bubble, first the bonds will crash out, and then the big tech and growth will crash out. And it looks like bonds started crashing out last year, and it looks like big tech and stuff is now crashing out. So I think we're gonna see bonds crashing and tech crashing at the same time, which is what was leading the markets forever, crashing at the same time. And then I think all the fund managers are going to start freaking out, because that's not supposed to happen. You're not supposed to have them both crashing. They're supposed to kind of wobble inverse, and they're both supposed to bull. And they've been doing that for 40 years or something. But if they both start crashing together, everyone's going to freak out. And then the rest of the stock market, so I'm kind of like looking at IWM as like the rest of the stock market that's not growth and everything like that, should obviously be good to the top of the market. So I like IWMs to the top, but I think what's going to bull past IWMs is these metals and miners and kind of stocks like this, minerals, base materials, and then yeah, the look to the top is not so crazy, but the other side, if we flip over, see like these are my bear market lines. We've already painted them. Those are my bear market lines for the backside of the bubble. And these are deflationary lines. Like we're in an inflationary move right now, but it's like a small inflationary move across. I mean, we've been in a deflationary downtrend since the 70s. And so let me, it's got to be deflationary. All right, let me talk about inflation, deflation a little bit. This video is way too long, and oh my goodness, got to take log off for this chart. This chart doesn't log. But like as far as like treasury bond yields go, like interest rates were like 20% in the 70s. They were insane. And then this is the spread. This is the spread between the 10-year and the 2-year, which gets this nice little cycle. Like the spread tightens or even inverses, then it widens. It tightens, it widens, it tightens, it widens. So when the spread is widening, the interest rates are going up. When it's coming down, the interest rates are going down. This chart doesn't tell you what the interest rates are. It just tells you that right now the spread is widening, and it should continue to widen for a year or so. And right now, like the short end is staying near 0, and the wide end is pushing up. And it looks like it should push up to 3 or something. So I wouldn't be surprised to see the 30-year be at like 3.5 or something like that. Later this year, next year, or something like that. And so the Fed is saying like interest rates are at 0, and the bond market is saying like no, they're not. They're not at 0. And the Fed's going to have to come out and announce higher interest rates at some point, because they don't actually control this. Like they're going to have to say what's going on with the market. But right now they're just like, oh yeah, we're keeping interest rates down. Like, okay, maybe you are, maybe you're not. But this whole time, this kind of waving pattern has been going on since like the 40s. And it waved up from the 40s to the 70s all the way up to 20% interest rates, and then it waved down from the 70s to now at 0, last year. So we are in an inflationary up cycle, like a short-term cycle right now, for sure. But the next down move, we'll cycle back down. And the question is, do we cycle to positive interest rates or do we cycle down to negative interest rates and continue the deflationary cycle? And I guess on the inflationary idea, it would be like the yield curve didn't invert this time. Like the yield curve stayed positive, the long end pegged and the short end pegged at zero. The long end of the bonds are going up, like the 20 and 30-year bonds are increasing, right? So that's a different pattern. Like what we've had the whole way down from the 70s is we've inverted the yield curve, and then the long end was pegged at a higher rate, right? And the short end fell. And that's when you kind of go into like a recession and you go into the inflationary move. The short end falls, like the Fed will buy the short end down or whatever. But the yield curve has been inverting the last few cycles. This time it went flat, it didn't invert, and now the long end is going up. It's doing a different pattern. So that could tell me that this is actually the deflationary bottom, just because the pattern kind of changed. So that's kind of my inflationary argument. But my stock chart says, yeah, no. My stock chart says this. And this is a deflationary angle. Like an inflationary market, if we got a blow off top, like you could blow off to here. But like an inflationary market usually does like stagflation kind of junk. But like a deflationary market would, crash down along these downtrend lines. So that's sort of the topping pattern I'm looking at. And I don't know if I'm inflation or deflation. I don't know what kind of assets are going to be safe on the backside. Like gold will probably hold up on the backside. Silver is not good in a deflationary scenario. Like silver crashed real hard during the Great Depression. Dollars are the reserve asset and oil. So those should hold up, but you can print dollars. So it's not quite as strong as gold that you couldn't print like during the Great Depression, which was the reserve asset then. Anyway, all right, worry about that later. There's some scary downward stuff later set up here, but right now we're just kind of trending in between these bull channels, and that's what I'm looking at. That's what I'm looking at today. And let me get back in here and see if we're breaking back up into this thing. Doesn't look like it. Okay, we're coiling under it. I'm calling bear, and there's not much underneath here stopping us. But this is a short-term bear move to go check out some support levels. Oh, what happened? I lost. Oh, the log. Ah, there you go. That matters. Yeah, if you don't log your charts, you gotta log the charts and you gotta turn on overnight trading, or else your trend lines get all screwy. If you log it, they'll fit. All right, so and this is Trading View. People ask that quite often, but yeah, this is Trading View, and I like to draw lines, and I like to see which side of the lines we're coiling on, because that tells you the intent of the market. Not the move that you're making right now, but like the next move. This is bearish intent, and it's bearish intent below the red line. Is what I see right here. We want to break this red line, and the red line actually doesn't last that long, so it's got to be a hell of a move to get under that thing. And the purple line is still strong. We've never coiled under the purple line, so right now that's what I'm seeing, under the red, on top of the purple. And then we'll see what's up. That's my move. That's my move for this week. That's gonna freak people out if it does that. But man, this market can do stuff. It can do it. Don't be surprised if that happens. But anyway, that's just my chart, and I'm wrong a lot. So just an entertainment idea, not investment advice. Happy trading.